Welcome back. You're watching The Money Show on ET now, and it's time for our Meet Your Fund Manager segment where we get you the fund managers of some of the most popular mutual funds out there and talk about what his investment strategy is and what exactly should investors expect. So today's Meet Your Fund Manager segment has none other than Vinit Sambre of DSP Mutual Fund, and we'd like to talk about a fund managed by him. That's the DSP Small Cap Fund. It's quite an interesting time as well because we are looking at the way large caps have sort of now started cooling off, but mid and small caps have started showing a bit of traction. So I suppose, Vinit, it's a great time to get to you. Thank you so much for joining us. To start off with, tell us a bit about the DSP Small Cap Fund.
The fund started in 2007 and it's almost 12 years journey which the fund has crossed. Today the assets under management is short than 5,000 crore. And in terms of the mandate, the fund looks at the companies which are in the small cap universe as defined by SEBI. So currently we have about 70-75% of the stocks within the small cap universe, and in terms of the philosophy, we have followed a buy and hold philosophy. It's comprising of 70 odd stocks in the portfolio, with the principal objective being looking at companies with a 2 to 3 years view. Looking at companies, businesses which basically are very capital efficient, are run by good management and are quite competitive in their businesses. So in a way the category leaders as such. So I think that's a very short update about the fund.
All right. Okay. Let's also talk now about the fact that a lot of experts are saying that, perhaps large cap funds are getting a bit expensive. So is it a good time then to increase exposure to small cap funds?
So clearly from the valuations viewpoint, if I were to look at the valuation of our DSP small cap fund today, it is trading at roughly about 14 times on our FY21 estimates, which means that the valuations have really cooled off from the highs which the fund had touched earlier, and versus the large cap, clearly the category has started trading at a discount. So from the valuation perspective, it does make a sense to look at the small caps, but only caution being that given the way our economy is has slowed and is taking time to pick up, the returns expectation has to be slightly more back-ended is the only caveat which I would like to say.
Small caps have had a tough year, but nevertheless, compared to the index, your fund has stayed resilient. So what do you attribute this performance to?
I think if we look at the last 2 years, 1.5-2 years, as the as we started seeing decimation in the small caps, clearly our selection process where we have tried to eliminate companies with poor corporate governance standards, companies where capital allocation is not proper. I think that has benefited us in terms of the performance, because we have seen some of the companies with inferior business models or poor governance standards actually getting disrupted totally, and which is where I would say that we were able to sort of relatively be much better off. And some of the segments which we are slightly more exposed to in terms of the specialty chemicals, the healthcare as a category, I think those have done well for us. So I think those I would attribute as the key reasons for being slightly better than the index.
We do know that small caps, mid caps tend to have higher volatility. So that brings along with it perhaps a little more risk as well. So, if an investor who's watching right now wants to invest in the DSP small cap fund, what should be their A, their time horizon, and B, an investor's return expectation?
Time horizon, clearly I feel that investing in small caps is always going to be very volatile. And in terms of the investors, they need to have more than 5 years time horizon in mind before they look to invest into the small caps. That's a view I have. And in terms of the returns expectation, I think it's very difficult to mention in a specific number, but the return expectation has to really follow the earnings growth metrics of the companies which we own, and also the ROC profile of the companies which we own. So in a way, what we look for our set of companies is upwards of 15-16% growth in terms of earnings, and our fund basically in terms of the ROEs or ROCEs, it is around 17-18%. So I think those can be taken as anchors for the investors who are willing to look at the category for over 5 years.
Okay, you mentioned ROEs and ROCs as one of the parameters, but Vinit, we've seen that in the last 1 year, we've seen DHFLs and RNFSs play out, and small caps and mid caps have really been at the receiving end of, stock price downward movement. So how do you ensure the quality of the stocks that are entering your fund in the midst of even high rated stocks going bust?
So I think it is the like I said, that we have clear filtration process which we go through, and it is also collectively the number of years of experience which me and my team really have, which enables us to have a clear view around how we see the governance standard for many companies. So I think the past experience come out as handy. The other is while the fund is going through the companies which we select, they go through their own due diligence. We've also in a way enhanced the level of analytics which we have. We have specialized skeptical analyst in our team who is a second layer over the regular research, which we would like to sort of avoid some of these errors. So I think that's how we have sort of taken care in terms of being more strong in terms of selecting companies and eliminating some of these some of these traps.
All right. Okay, Vinit, thank you so much then for joining us on this edition of the Meet Your Fund Manager. We spoke about the DSP Small Cap Fund and interesting set of names that find a feature. You have Atul Limited, Ipca Labs, DCB, SRF. They've increased their weightage, by the way, in Aarti Industries, Prism Johnson, Tube Investments, while decreasing it in an Ipca Labs, KPR Mills, as well as Somani Ceramics. But of course, if we look at the last 1 year, beaten out of shape, down 3%. But like we always say, right, when you invest in in equity mutual funds, you have to do so for the long haul. Okay, on that note, we'll take a very short break. Do come right back, as in our Spend with TMS segment, we decided about talking about putting your money in gold jewelry schemes.